We are told this kind of trust is a modern invention. Credit, fixed deposits, contracts, stock market, international banking. We assume the West figured it all out and then taught it to us.
Possession so-called financial gurus.
One with assets that really have value.
Are at historic highs, and there's growing concern more and more people will fall into debt.
Bank Americard. Think of it as money.
That before they came, we were just a simple bazaar. People in the dust swapping apples for rice. A charming, primitive people waiting for a European banker to sail in and teach us how to count. But what if that's who we really were? Then how do you explain a man who 2,300 years ago sat down and wrote out in organized detail the working rules of debt, lending, interest and risk? Not a poem about money, not a prayer for wealth, a system. His name was Kautilya. History remembers him as Chanakya, the strategist who took a boy named Chandragupta and built him into an emperor, the kingmaker, the master of power. But you can't run an empire on strategy alone. You can't pay soldiers, fund trade, or fill a treasury without first answering one question: how does money itself work? So in the middle of his great book on statecraft, the Arthashastra, the one that often people quote just for politics, Chanakya wrote down the answer, not as wisdom, not as a proverb, but as a working code of finance. He used traditional Indian words for it. A loan he called Runa. The interest on it, the price you pay to use someone else's money, the same thing hiding inside every EMI today, he called Kusida. Measured, regulated, priced, written into the law of the land. And here's the brilliant part. He didn't set one interest rate for everyone. He set the rate by the risk. Think about how a banker thinks today. If you ask for two loans, a home loan against your house and a personal loan against nothing but your word. The home loan is cheap, lower interest rate. The personal loan is expensive, higher interest rate. Why? One is safe, one is risky. The bank isn't charging you only for the money. It's charging you also for the risk of not getting it back. Now go back 23 centuries and watch the same idea run. A safe ordinary loan, around 15% a year, lent to a merchant heading overland into the forest, into bandit country maybe, where the goods might never arrive. 60% interest rate. And finance a sea voyage, one wooden ship past the horizon where one storm, one pirate could swallow the whole fortune. Interest rates as high as 240%, 15, 60, 240. The deadlier the risk, the higher the price of the money. That isn't a man haggling over apples in a bazaar. That's a risk premium, the precise, calculated heart of modern finance, written into law 23 centuries ago. And it didn't stop at the interest rate, because these people, our ancient Indians, understood something every banker knows in his bones today. A loan is only as strong as your power to enforce it. So serious debt had to be written down in a formal recorded contract. They even had a word for it, Runa Lekha, the ancestor of the loan agreement you sign and initial today. Behind that loan, they wanted a guarantor, a third person who promises to pay if you can't. We call it a co-signer today, also a guarantor. They had one too. And then my personal favorite, a rule called the Dviguna, a law to protect the borrower from his own lender. The interest could never grow larger than the original sum. No matter how many years passed, no matter how long the debt dragged on, a legal cap on greed. Perhaps a good idea for RBI today. Consumer protection against runaway debt. 2000 years ago, before the words consumer rights even existed anywhere on earth. So look at what this land was holding, Bharat was holding 23 centuries ago. Debt, interest, risk-priced lending, written contracts, guarantors, even a law to protect the borrower from extra greedy lenders. The blueprint was already drawn. And that's what makes the rest of this story so strange. Because if all of this was already here, written down, working, this sophisticated, then what on earth happened in between? How did we travel from Chanakya's rule book to a world where we genuinely believe the West taught us how money works? To answer that, we have to follow the money forward, not through a textbook, but through the actual places it left its mark. Now, of course, some will say that there's just one rule book. That doesn't mean that ancient Indians had such a deep understanding of finance. Is there any other evidence? The yellow evidence? Not just a book, but also the actual places where finance left its mark. The caves, the temples, the ports, the ships. "400 years separate Chanakya from this cave. So how did his rule survive that gap? Not just as a copy of his book. This land never carried knowledge that way. It carried it as a living tradition, a river of law books flowing on after him. By the time we reach this cave, the principal stays close and the interest is fixed by contract isn't a clever idea someone read in a book. It's simply how money works. The rule book had dissolved into the bloodstream of a civilization. The cave is one of a cluster of Hindu, Buddhist and Jain caves near Nashik, hand cut around 2300 years old. And the writing carved inside cave number 10 isn't a prayer, it's an account, a single financial deal. Around 120 Common Era, a man called Ushavadatta, son-in-law of a powerful king, came to these hills. He wants to care for the monks living here, clothe them, feed them, shelter them, not for a year, forever. Almost any rich man would just hand the monks a bag of coins and walk away feeling holy and good about himself. But a pile of coins only shrinks, spent year after year until one day it's gone. Ushavadatta does something clever. He gives the monks money not to spend, but to keep, with one iron rule. The original sum is never touched. It's put to work earning interest, and only that interest feeds the monks. So the gift never runs out. It's exactly what a great university does today. Never spend the fund, live forever on what it earns. And he was doing it in the year 120 Common Era, nearly 1900 years ago. But the real genius is who he trusts to hold the money. Not a king's treasury, not a guarded vault. He hands the silver to a guild of weavers, cloth makers. And that should sound absurd until you know that these guilds, the Shrenis, were the most trusted institutions in that world, self-governing, bound by their own code, famous above all for keeping their word. The bank here wasn't a building, it was a brotherhood of craftsmen. And the wall proves this was real finance. 3,000 silver coins split across two guilds at two different rates. 2,000 at 12% a year, 1,000 at 9% a year. One return paid for the monks' robes, the other for their daily needs, carved into rock like the terms on a fixed deposit slip your bank prints today. Everything Chanakya wrote down, principal, interest, a rate set by the deal, a binding contract, all of it right here, dated, named, done. The rule book had become a receipt. But how much wealth can a single guild really hold? One rich man's fortune, maybe two, that's enough to clothe a few monks. But who banks a whole kingdom's harvest? Who lends a village the gold to dig a lake? For that, you need something far bigger. One large, trusted institution standing at the center of every town, big enough to fund whole villages at once. And that is where the temple comes in. Now, when we think of a temple, we think of one thing, gods, right? Murtis, prayer, a place you go to pray. But in ancient India, the temple was also something else entirely, the richest, most trusted institution. Think about where a farming civilization keeps its wealth. It pours it into the one place everyone trusts and no one dares to rob. The king gave it gold, merchants gave it land, and the temple didn't let that wealth sleep. It lent it out and did charity for the poor with the money earned. 1,000 years later, into the heartland of the Chola Empire in the deep south, one building says it all, the Brihadeshwara temple at Tanjavur, built around the year 1010 Common Era by the Emperor Rajaraja Chola. Its walls are covered in writing, long, dense inscriptions cut across the granite, and they aren't hymns. They are account ledgers, loans, gold, land, interest carved into the temple itself. A village needs gold to dig an irrigation tank so the rice survives a dry summer. The temple lends it at interest, the terms cut into the wall. And the interest flowing back doesn't vanish. It pays for the lamps, the festival, the feeding of the poor, the charity. If you see the system, it is fascinating. Devotion comes in as gold. Gold goes out as loans. Loans grow the harvest and the trade. The harvest and the trade feeds the faith and charity that started this entire process. A place that takes deposits, makes loans, and lives off the interest, written into stone 1,000 years ago. And all of this funding good charity for the poor. The guild had banked the merchant. The temple was banking the entire land. But there was still one frontier this money hadn't crossed, the sea. Remember the riskiest loan in Chanakya's book? The sea voyage, the one that could cost 240% because one storm, one pirate, and the whole fortune is gone. For centuries, that risk capped how far Indian money could travel. One merchant, one ship, one bad stormy night, everything ruined. So how do you trade across an entire ocean when a single voyage can wipe you out? And the answer came from that same southern coast in the form of a corporation. Yes, a corporation. Centuries before the British East India Company ever existed. Centuries before even the UK existed. This corporation even had a name, the Ayyavole 500. The 500 stood for its founding merchants in a town called Ayyavole in Karnataka. Not one trader, not one family, hundreds of merchants bound into a single company with their own flag, their own laws, even their own private army. And what they did next changed everything. They shared the risk. Instead of one man betting his whole fortune on one ship, the company carried the danger together. If a ship went down, no single member was ruined. The loss was spread across all of them. The thing that had terrified Indian trade for 1,000 years, the sinking ship, was suddenly survivable. That, if you think about it, was insurance in everything but name. And it worked so well that the Ayyavole outgrew India itself. An Indian merchant company writing its own trade law onto foreign soil centuries before a single European company sailed east. The money, the Indian money, had finally crossed the sea, but it was still moving as gold, heavy, slow, guarded, risky, and the final leap was about to make even the gold disappear. Paper, that's what replaced it. So far, the money has always been a thing. Coins in a guild scare, gold in a temple's vault, treasure on a ship, always something heavy, something you could drop, lose, or steal. Now, picture the problem this creates. A merchant in Surat needs to buy silk in Bengal, the other end of the country. Is he really going to load a bullock cart with sacks of silver and drag it 1,000 miles through all this land on the way, praying that he arrives alive? Of course not. Think of all the risks involved. But he didn't have to. He could walk into a banker's place, a saraf in Surat, and hand over his silver. The saraf gives him a single slip of paper, an amount and an instruction. The merchant carries that said paper, nothing but that paper, across the whole country. In Bengal, he walks into another saraf's place, a complete stranger, hands over the slip and is paid the full amount in local silver coins. No gold or silver ever made the journey, only paper, only trust. This was the Hundi. It ran on a web of bankers who didn't need to know you. They only needed to trust each other's word and each other's signature. And think about how big that idea is. Money was no longer metal. Money had become information. A promise written down and honored across 1,000 miles by people who had never met. It worked so well that the Timurid Mughal Empire ran on it, moving imperial revenue and paying armies across India with barely a coin on the road itself. And now, look at this card again. The credit card, you can just tap it. The machine that is an ocean away, that will trust you simply because you're using this card. You're not holding a Western invention. This means itself could be Western, but the idea behind it is not Western. What you're holding is the newest version of the Hundi. So what happened? If this system was this good, this old, this deep in our bones, why does almost no one in India today know it ever existed? Because when the British East India Company came, when they first arrived, it didn't come to rule, it came to do business. In fact, it borrowed from us. The great Saraf families of that time had the capital, and the company leaned on them just to survive. But power changes things. And as the company became an empire, it built its own Western banks to serve the colonial state, pulling India's wealth outwards and choking credit to the very people who had run finance here for 2,000 years, over 2,000 years. And then came the deepest cut. The bankers who had once financed kings were stamped in the language of the new rulers as something small, informal, native money lenders. A sophisticated financial civilization reclassified as backward with a stroke of a colonial pen. 2,000 years of a working system interrupted by 200 years of colonialism. For every single year, the Western model that ruled here, our own had already been running for more than 10. We were never a primitive people waiting to be taught how to count, how to account, how to do large trust-based commerce. We were one of the oldest, most sophisticated financial civilizations on earth. The invasion didn't make us backward, it just made us forget. Look, see, I don't make these videos to sing hymns to the greatness of our past. I make them for one reason, so that no Indian lets 200 years of being ruled erase the memory of who we were for the 2,000 years before it. We should feel proud to belong to a civilization that gave humanity so many of its first ideas, including the way the world learned to move money based on trust. And maybe that's the most fitting part of all, this little piece of plastic. The Western invention we were told to be grateful for is already fading from our hands. Because today, it isn't a foreign card running the country's money, it's UPI, built here, used by hundreds of millions every single day. The wheel has come full circle. We were the people who first turned money into trust on a slip of paper. And we just became the people teaching the world how to do it again.